president of Prestige Economics. He's also a Bloomberg best analyst when it comes to US economic data. So Hills and Rath had it wrong then?
Well, you know, I think that this has always been the case, really, that there's been an option for the Fed to do more, and they would do more if things got significantly worse. But the question is the data bad enough for them to do anything? And I think we're beginning to hear from the FOMC members already. We heard from Lacqua earlier in this week that there was a hint that they might do an extension of Operation Twist. I think they could also maybe extend the language. Right now they're going to keep rates exceptionally low through at least late 2014. Well, if you're already saying through at least late 2014, what's another 6 months or so among friends? You say through at least early 2015. You know, it's not that big a change. They could do those things to do the quantitative easing, the third round QE3 that people have been talking about for many, many months. That's a much bigger step. That requires a lot more bad data before they'll actually go through with that.
Jason, you're at OPEC next week.
Yes.
We are actually expecting some very tense discussions about supply and demand.
Yes.
And this, of course, comes on the back of that Chinese surprise interest rate cut yesterday.
Yes.
Are we going to see a sharp fall in oil demand?
Well, you know, I don't think we're going to see a sharp fall in oil demand. The truth is that if you look at global growth estimates, you look at the global economy, things are still moving forward. I think the best way to think about the global economy right now is modestly improving, modestly growing. It's not blockbuster growth, but you're continuing to see that demand ratchet up. I think when we look at what OPEC's going to be most concerned about, this meeting comes at a very precarious time. It's right before the Greek election, and I think there is a huge anticipation, although overblown, that what hangs in the balance here is not only Greece, but maybe the fate of all of the peripheral countries in the EU that are having some trouble right now, as well as potentially the Eurozone itself. And those kinds of concerns, it could push oil into a downward death spiral, and that's what the members are going to be watching for. At the end of the day, I think the euro survives, but I think that those concerns could push up the dollar and could push down growth expectations for Europe. And those are much bigger concerns. Cut in Chinese interest rates actually really good for crude because it's going to encourage and stimulate more growth there. Same thing if the Fed does more, the ECB also this week's hinted at more.
Unless, Jason, you think that they're going through a hard landing and are scared and therefore cutting interest rates sooner than something hits.
Well, this is right. So if there's going to be a hard landing, sure, but that means if they were really anticipating a hard landing, they'd be probably cutting even more, even faster. And at the end of the day, when we look at 2013, you're either going to still have a lot more accommodation, which is going to be bullish for prices, or you're going to have a lot more growth, which is going to be bullish for prices.
How low can it go for Saudi? Where's the lowest level that Saudi can tolerate on crude?
Well,
with the Brent contract,
this is a tough question, and I've heard this number tossed around quite a bit. Some have said 70, some have said 80. The number they've said that they like, that they feel is fair and sustainable in the market, that's been hinted at multiple times, is around this $100 level. As long as Brent's around 100, Saudi Arabia is not going to be willing to cut too much, especially now with the full implementation of the Iranian oil embargo right around the corner, especially with all of that tension with Iran right now, very, very high. They're going to need to keep the market globally well supplied as those Iranian barrels continue to come off the world market. So it's going to be politically very tough for them to ramp down production with the price kind of near the level they like.
What about 80?
Well, 80 is a different story, but WTI, you know, if we're right now we're at $97, $98 a barrel. We're not near 80. If what they're probably going to have, if we can even get a statement. 2 meetings ago, they didn't have a statement after the OPEC meeting. There was no resolution. I think it's very conceivable we could have a similar situation because the tensions between Iran and Saudi are so high, maybe we don't even get a statement. But what we are going to get, if we get a statement, is a reiteration of the fact that they're going to keep a close eye on the markets, and if things slow in Europe more, if prices fall more, they will take action. And they will take action if prices continue to fall sharply.
All right, Jason, thank you. Jason Schenker there, president of Prestige Economics.